please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Would you say ownership is an issue? I mean, in the sense, if the PNB fraud had happened at a private sector bank, would RBI have been easily able to, supersede the bank like it did in Global Trust Bank in 2003? Do you think ownership is what we have to attack, therefore?
No, look, I think a system with public and private banks can work reasonably. The question is, are the incentive structures in the public bank appropriate? And this is something we need to examine very carefully. What happens in these kinds of situations? How much does the management know? What length of tenure does it have? What incentives does it have to find out what's going wrong and put the systems, appropriate systems in place? And what kind of monitoring does the board do? Is the board composed of engaged professionals who understand risk management and who ask the right questions about risk management and procedures? One of the things we did during my time was we got rid of a whole set of box-ticking requirements we had for the public sector boards and asked them to focus on the 5 or 6 big issues that they needed to keep the bank appropriately managed. Now, we also need to ask questions about who appoints these board members and on what basis and how the board members are compensated. One of my concerns was that we compensate public sector board members at a much lower rate than the private sector can compensate. So even in the market for board members, the public sector is at a disadvantage. Even if you had a perfectly a perfectly good procedure for appointing them. Of course, the Bank Board Bureau was supposed to appoint them, but that never actually happened. So I think we need to look at all this and see if the governance of the banks by the government is being done in an arm's-length professional way, as was suggested during the various Gyan Sangam, or in fact, we haven't moved away from that still, and more needs to be done. These are important questions to ask.
Well, fair enough. We did have the Bank Board Bureau, but several managing directors were changed without telling them or without telling their own boards. So do you still think that within the current system of overwhelming government domination, we can run these banks better?
No. I think we have to change that system. Under the current system, the boards have no responsibility for appointing the management.
Yes.
If they have no stick over the management, they don't choose the compensation for the management particularly. If they don't have appropriate sticks over management, what control can they have? And if everything comes from orders from the ministry, as opposed to the board determining things, including the appointments of the board, then essentially you've taken off powers from the board, rendered it fairly toothless, and then you expect it to manage the bank in the bank's best interest. I think we need to think very seriously about public sector bank governance reform. One of the experiments that was tried during my time was to try and bring in private sector people at a lateral level. Of course, you want to be careful about doing too much of it. But one of the problems in doing that, of course, is that private sector people shy away from coming into the public sector banking system, except very few who are motivated by patriotic reasons. You can't rely on that to get a large pool of people into the system. So amongst the things we have to examine, the governance of the public sector banks. Are the boards appropriately appointed and appropriately incentivized and appropriately empowered? The management. Does the management have adequate pay, compensation, etc.? But do they have adequate tenures also? And are they, appropriately qualified for the job that they have? We're putting people in charge of, 5-10 lakh crores at these banks, and we need the best people in the country to do it in a reasonable way. And of course, they have to have the ability to hire good people, to bring good people into their jobs as executive directors, as head of risk management and so on, the public sector was a great repository of talent. But over the years, because of a variety of issues, including hiring freezes, including constraints on whether they can hire on campuses or not, their ability to recruit talent has been greatly diminished. Now, ultimately, the issue is not of pay. Public sector banks pay much more up to a certain level than private sector banks, typically at lower levels. It's only at the higher levels that they pay less, and that's precisely where you need the best talent.
Absolutely.
So we need to think about public sector pay also, how to rectify it in a way that does more pay for performance, but also gets good people in there.
Okay, well, just one question on this. Montek thought so, and therefore I'm asking you when I interviewed him. Is the answer bringing down government stake below 50% so that, you're free from all these recruitment constraints?
Look, I think that is an experiment we should try with a few public sector banks. But until you get the governance right, you want to make sure that the board, once you bring the stake down below 50%, is able to govern the bank. Otherwise, if you have a bank which is not governed by anybody, neither the government nor the board, and management has no oversight, you could get fairly bad outcomes.
Okay.
So I would say the first criterion is to strengthen the governance. There is a chicken and egg problem, that it may be hard to strengthen the governance without first distancing the bank from the government. But we need to work on both at the same time.
Okay. Well, actually, we are running out of time, so I want to try and pack in some more questions quickly. The Reserve Bank has issued a circular almost pushing all the bad loans of, vintage loans to the NCLT in the next 6 months. It's a fairly strong circular and also says that banks should, it's almost looking like an AQR2, and it might put 3-4 percentage points more of already stressed loans into NPAs, but it looks like it will be the last sweep. Do you think that is the way to go?
Well, I think it's important that the NCLT shows some proof of the concept. That is, we must bring some of these resolutions to a conclusion. The banks must get their money back so they be able to unwind some of the provisions they've made. I think that is important, that the time frame that has been given should be adhered to as far as possible. And some of these knotty questions that have arisen, who can bid and who can't bid, should be resolved with some clarity. I think if we do that, then there will be a growing consensus that there is this NCLT which works and which is a resolution of last resort. If nothing else works, we can go there. Which then means that all the out-of-court systems of resolution that we have in place will have a much better chance of working, because banks, way before it goes to the NCLT, and the promoter can sit down and say what makes most sense now, so that we don't have to go into a resolution which can be painful for both of us. So I would very much like to see those first few cases that went in resolved, and resolved with some degree of success, in the sense that the firm is put back on track, the bankers get a fair amount of money back, and we move forward.
Okay.